You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the Flowmaster Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. And now, get ready to hit the Option Block.
Welcome, everybody, to the Option Block. It is January 29th, 2024, and it is I, Andrew GIOVINAZZI, the Rock Lobster from OptionPit.com, filling in for one Mr. Longo. I do enjoy these times when Mark is gone because my guest host, who needs no introduction, but I'll introduce him anyway, and I can talk a little bit of trash about him because the benevolent dictator is out probably sunning himself somewhere on a beach, who knows, somewhere having fun. But since I semi-invoked him, I will call him in now. It is Mr. Mike TOSAW, Uncle Mike, account exec extraordinaire at St. Charles Wealth Management. Mr. TOSAW, welcome to this here Option Block program.
Always a pleasure to be here. And so, I mean, let's get right to it. You know what I heard Mark Longo is really doing? I heard that he is selling options so far out of the money, he's leveraging them, and he's getting only a penny for premium on them.
You know what's funny? That the largest sin that we could think of for Longo is selling way out of the money penny options.
You know what? I think I heard another one. I heard he's actually buying stock. He's buying options. He's buying call options on stocks that are priced at 50. And then at the same time, he buys the 55 calls for the same month. He's doing Texas stupid trades.
So I think, and I guess we can't put it really by him if he's doing the Texas stupid trade, but now I hear a little birdie saying he is at some pro wrestling event, the Royal Rumble in Tampa. So he's just basically like, okay, I'm out of here. I'm going to let you guys, and he is on some sunny beach somewhere doing something.
No doubt about it. At that pro wrestling event, you know what he's probably doing? He's probably finding ways to say bad things about the Ultimate Warrior. That's what I bet he's doing.
So you know what? I never quite got into pro wrestling, I have to say. I know you guys love it, but let's just say I live vicariously through you and Longo on the pro wrestling thing. But I'm glad you're into it because you guys really know quite a lot more. You guys know more about pro wrestling than I know about options. So I thought I knew a lot about options, but it was nothing compared to your guys' encyclopedic knowledge of
I don't know
wrestling.
whether I should be complimented or whether that's just a sad truth.
Maybe it's a little of both. All right. Well, I guess since we got the intros over with, we've besmirched Longo somewhat. So I think that's mostly all the stuff we really need to do for that part of the show. So why don't we roll now into my favorite part, actually, or one of my favorite parts, is the trading block segment.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is where we talk about markets, where they are, where we think they're going. Even Mr. TOSAW might give his famous 50% guarantee. It might be up or down. Who knows? Who knows what he'll come up with? But we do have some big events this week, and I want to hear Mike's thoughts on them. But right now, what we'll do is we'll start with just some stats. At the start here of the show, we have VIX is 1376. It's up 26 cents from our last show on Thursday. VVIX, that is the vol of vol, is back into the low 80s, 83.51. VXX, the reliably crappy product, is 1460. It's down 15 cents from our last show. UVXY, 764, down 6 cents from our last show. So that's getting ready to split again. SVIX, Mr. Rhodes' favorite vehicle, is 39.40, up 15 cents from last show. And I would also say with SVIX, now that I look at, because I do like trading that product, it's kind of a fun one, but we haven't seen a new high in SVIX in quite a while, actually. If one were looking, I think the last high over the last 30 days in there was, just recently, 41.13. So since last week, and that was the 24th, we haven't had a new low in the volatility future space. We have been kind of coasting along, and as we've been going into this week, volatility futures have picked up a little bit. So an inverse product like SVIX is starting to weaken a little bit, trading just around 39. And lastly, we have UVIX. It's trading 1180. It's down 20 cents from the last show. And again, UVIX works in the opposite direction of SVIX. UVIX is the 2 times long product. And again, it's more than reliably crappy. It's crazy crappy until volatility futures go up. And then it is quite a fantastic instrument when VIX futures actually start to go north again. But even now, from the last show, it's having a hard time. It's not quite moving enough to get off the mat. So I have UVIX down 4 cents. It is up from, let's say, Thursday's low around 11. But it's, at least for today, it's kind of going sideways, even with VIX up on the Monday markup. So with that in mind, we have what I would call, let's just call it a not very interesting volatility market. Normally that happens when you're going into an event like the FOMC. They're going to say something about rates. I'll have Mike chime in here in a second, but are we going to raise? They're going to lower. Mostly, I think the bull market we've had is because they've stopped raising. And it is unlikely that they raise in the foreseeable future. I think more aggressive rate bears thought, they would start to drop rates. I don't really see that happening with government spending, but again, that's just my opinion. But we do have markets. I believe we've had a few closing highs here in SPX. And going into this announcement, that is you can only say, hey, all-time highs are all-time highs. But once I say all-time high, I do have to invoke Mr. TOSAW because, he does have the most the most famous SPX saying of all time. Mr. TOSAW, I'll let you have at it. What do you think about what's going on for this week into the Fed and into some huge big tech earnings?
Well, I think interesting is definitely the key word right now. There's a lot to watch at this point. I mean, unfortunately, I can't say my statement today because we're not at we're below 49.06 or whatever it was for the all-time high. And but what's very interesting about this week is that we are right at the all-time high. We're just a few points below it. And we are staring the Fed in the face as well as big tech earnings. So as we're looking at this, we have the Fed. What are they going to do? Are they good? I'd be shocked if they raised rates. I really don't see that happening. My belief is that they're going to pause and just say some buzzwords like they're going to remain data dependent or something like that. And then on CNBC, Rick Santelli will argue with everybody, and it'll just be a normal Fed day for the most part. We'll have a big move to the upside, a big move to the downside, and then we'll see where it's at the end of the day on Fed day. But with what it's going to be going forward, I could see if we did lower rates a quarter point, I could see a pretty big rally. And the reason I could see a pretty big rally is that I think we would blow through the all-time highs in the S&P because I think we're going to remain relatively flat until then. I think we could blow through them, and there's nothing stopping them on the upside at that point in time. If we get that, if we get some type of a rate cut, or if we get some type of dovish sentiment from the Fed meeting, whatever the case may be, we might get to 5,000 relatively quickly, and not necessarily the same day, but we could have a shot at getting there in the S&P in the next week or two if we get some type of dovishness in some way, shape, or form. Now, if we get some type of hawkishness, I always mess up my doves and my hawks. If we hawkishness, meaning they think they're going to raise rates, then I think it's going to be. Then I think the current all-time highs will act as a an area of resistance, and I think we will be going down. Now, with that, how does this tie into tech earnings? Well, tech earnings, they are a very big deal, as we've talked about on this show. It's very hard for the market to increase if Apple doesn't increase. And just in general, throughout the history of the market, it's difficult for the market to have a major uptick if technology is not on board, or at least in recent history. And so I think it's going to be interesting to see if we have a dovish Fed and we have good forward-looking forecasts in tech earnings, then I think it's going to be look out above, so to speak, with the markets. If we have a hawkish Fed and bad forward-looking statements for big tech earnings, then I think it'll be look out below. Now, with that, we're probably going to get somewhere in the middle. It's probably going to be hawkishly dovish on the Fed, most likely at this point. That is my prediction. I think they're going to pause, and I think it's going to be hawkishly dovish or dovishly hawkish, whatever way you want to look at it. I think that's what we've got to look forward to, and I think it's going to be, as Mark Longo would put, a resounding meh at the end of the day. That's what I think is going to happen. And then I think after that, with tech earnings, that's where we're going to really see the direction of the market for 2024. Is January just a flash in the pan, or are we going to have continuation with the outlook on tech earnings? Now, the other thing to look at on here is the bond world. And in looking at the bonds, we haven't really had a ton of movement so far in 2024 with the bonds themselves. They're down slightly in terms of the price itself, but really not a whole lot over the course of the first month of the year. So I think that the bonds are relatively, or rather Fed dependent right now, just seeing what direction the Fed is going to go before anyone wants to actually get off the wall and get on the dance floor. So that's what I'm seeing right now in the markets.
That's quite a smorgasbord of things. I agree with you on the pretty much all that. I don't see how they lower rates this cycle. they have raised rates high enough now that the interest that the government is paying is almost what, $1 trillion a year, $800 billion a year, a pretty enormous number, which is quite mind-boggling. It was almost nothing a few years ago, and now it's not. So that you would think that would start to put some kind of crimp in federal spending, but we have yet to see it. And I think that's why rates will stay where they are. And from what I could see, the tech earnings have been okay. Like Taiwan Semiconductor was okay. Netflix really got everybody off the mat. That was kind of I think the big earnings winner so far. We're waiting for AMD, Google, Microsoft, Apple this week. And to be honest, a lot of those earnings this year in, let's say, 2023, they were just okay. I don't recall a lot of revenue growth, a lot of earnings expansion. It was just kind of like okay. But it was enough to keep those stocks powering because everybody was looking for a recession or slowdown, and they were, somehow maintaining revenue. And I guess that was enough to bid their multiple up. And then, of course, you have the magic AI. You just have to say AI, and stocks do take off. Like IBM. IBM almost traded, I believe, almost broke 200, and is trading very near multi-year highs right now. So of course IBM, it's definitely a 5-year high for IBM. So it's trading, got very close to 200. It's since pulled back. But, they played the AI card, had good earnings. And so for the most part, SMCI, that stock was up, 30%. So, some of these stocks have, at least from an expectation point of view, have been delivering. Investors are still bidding them up. I think there might be a little FOMO there, where, if you just basically sat on your hands in 2023, now what do you do? Right now, what stocks do you buy? Personally, I think the oil stocks still look kind of cheap. Biotech, a lot of biotech still looks relatively inexpensive. The Russell is basically unchanged for 2023. So there are, stocks that are outside of AI really are kind of flattish to down since then. But it's hard. If you want growth, you need something with AI exposure in your portfolio. S&P 500 has those stocks, and that's why SPX is still rolling till the all-time highs. But I think this week has, I think we have 5,000 potential in 2 weeks. So over the last, I think in 2023 was these FOMC meetings, these rate release meetings had a lot of large market moving impact. Not necessarily the same day. There's usually kind of that up and down move of the day, like you talked about, where it was kind of ended up being a meh. But then I think over the last six releases we've had, within 3 days of the Fed saying whatever they were going to say, we had a 10 to 15 point move in SPY or 100 to 150 point move in SPX, which were relatively large moves, especially considering what the straddle costs. So if you were looking at that as what is the market telling us now, for instance, so in SPX, if I'm looking at the Feb 09, which would be 2 weeks after earnings, they're pricing that straddle at $80, which is about not quite 2%, about 1.75% for the S&P 500. So I think those are relatively inexpensive, given how we've moved over the last few cycles. And one thing, after the Fed says what they're going to say, that kind of is a lock for rates, or at least the rate expectation. I'm curious what you think about this, Mike, too, is like once the Fed says what they're going to say, they're really, and then you have these guys that they kind of pop off now and then, kind of sending the market up or down in the meantime. But it does set the rate policy and the rate expectation, relatively solidly now for the next month or 6 weeks when the next announcement is. And I'm curious if you think the market will find, again, I think VIX will be lower. It will trade probably lows of the year if there's any kind of, if it's basically goes as expected. But do you think once the Fed says something that does set an expectation for the market, for the next month, 6 weeks, until the Fed gets around to saying something else, now that we're in a stock market dominated by Fedland?
I think it does, because I mean, if they're even the least bit dovish, then I think the market's going to go bonkers. And if we just have, not the least bit, I think if we have the combination of dovishness along with a good tech earning forward outlook, not necessarily the earnings themselves, I think we're going to go bonkers. And I think with the expectation of it being dovish, let's say, I think that will be the expectation. And very seldom do you get a reversal in there to where Powell's going to come out and say, no, April Fools, we didn't do it or whatever. And that's not really what we meant. You get those now and then, because I remember there was one time to where, it was like 10, 12 years ago. No, gosh, it was like maybe 15 years ago. Maria Bartiromo, that's how long ago it was. Maria Bartiromo had said something on CNBC saying, I was talking to Chairman Greenspan. He said that what he said, he didn't really mean that he was going to be this much of something. And then the market just shifted instantly. And sometimes you get those, but it does not happen often. They're typically fairly tight-lipped. And when they have like the St. Louis Fed, the head of the Fed, or the Dallas Fed guy is speaking or something like that, you'll hear things that might change it a little bit, but typically not too much from what I found. So I think when it's in, the expectation is going to be there.
I agree with you, and it will set the tone. And we're also, I mean, you know how the market works on a psychological level. We are tantalizingly close to 5,000 SPX. I mean, and
I can
not very long ago we were 4,100. So it's almost too close not to get there just for a giggle. But anyway, let's look at some volume now. The most active indices, VIX, not doing a whole lot, only 190,000 contracts as of midday. And the reason why, I think everybody's placed their bets already. There isn't a whole lot of expectation to change in VIX between now and Wednesday. Now, Wednesday, Thursday, Fridays, that could be different. But there's not a lot of active trading right now. SPY is about normal. Usually it trades around 8 million contracts a day, trading around 3.5 million. So again, I think people are placing their bets there. SPX is a little light at 1.14 million. Average daily volume, about 3.2 million. So again, midday, not doing huge numbers quite yet. IWM, which I believe is just calling it the redheaded stepchild of the major indexes.
Hey.
Oh, sorry, I forgot.
Actually, I'm not a stepchild, so I really can't complain, but that's okay.
Is trading about 455,000 contracts. Average daily volume is 1.3. So again, light. I think people have placed their bets again. And then the Q is trading 1.5 million contracts, average daily volume 3.5. So it is, again, it's a light volume day and when we kind of expect a light volume. I probably would see a little bit of a pickup tomorrow. The traders are waiting. They don't really losing much by waiting a day to do what they want to do. So, but now let's look at some, I would just say the most active equity options as of midday. Number 10 on the list, Intel. And I'm about I'm actually on my own Intel shares. I'm back to up money on them. I've ridden them up, down, all the way sideways. And I don't know. I think I'm going to reduce more and look for something else. It's just, I think there's just other chip companies that are better, to be quite honest. But 218,000 contracts. ADV is around 247. So it is definitely trading. and it's off from around $49. So the earnings were not kind to Intel. That's another kind of bellwether chip that I found interesting. LCID and RIVN, apparently, everybody's in love with electric cars again. So you're having a couple pops there. You've got 166,000 contracts and 211,000 contracts in RIVN. So both of those are doing more than the ADV. I don't know if that's because they think that those cars are going to take over from Tesla. But you are seeing some volume there. Amazon is doing 265,000 contracts, about half of the ADV. So it's on pace to have a normal day. And as I recall, Amazon earnings, yeah, they're coming out on the 1st on Thursday when a couple of the other big techies come in. So we'll wonder how Amazon works AI into their cloud AWS infrastructure. Now here is one that has been off and on. I mean, Coin was having a massive day today, so that would bring in Mara. Marathon Patent Group is up 4%, doing 239,000 contracts, about on pace. It normally does around 500,000. So that's on pace by midday. AMD is still kind of killing it. 309,000 contracts by midday. Number 5 on the list. Normally doing around 900,000 contracts. So it's still jumping. Apple moves to number 4. And with earnings in a couple days, Apple's down on the day with the Q up, which is not normal. That's like almost breaking the law for some reason. NVIDIA is trading 400,000 contracts, normally trades 1.3 million. So it's a little light midday for NVIDIA. And I believe they are waiting for AMD earnings tomorrow. AMD reports tomorrow night. So there's a little bit of, a little bit of early speculating there. Now, here's a surprise, a name that has been in the option block on and off is SoFi. This one actually is back up to highs of the last year, I believe, or close to it. Yeah, so the last year, SoFi has been as high as, it's about it traded around 11 and change. SoFi, they like the earnings, probably getting closer to profitability. I'm seeing that the company, at least by the data provided by LiveVol, it looks like they're turning a profitable quarter. I have to get more info on that, but post earnings, 1.15 million contracts. So the people's like SoFi. Again, it's doing about 5 times average daily volume post earnings and still kind of holding up strong, up 17% on the day as I look at this. And then last but not least, or last is first, is of course Tesla bouncing back from the sadness of its earnings. I think we dropped from 220 to 180, and 220 to 180 in about 6 trading days. It has done the bounce of the dead cat at around 185 and is trading 187. I think it traded maybe as low as, I'm looking here on my screen, around like 181, something there. It's only trading 1.5 million contracts on a 2.18 average daily volume. So midday, I think people are pouring in. I believe there was some news released. I don't know if you have heard anything new in the Tesla front, Mike, but it looked like they might start selling their AI robots in 2025. And then, of course, Tesla will move from being just a car company, an electric vehicle company, to a true blue technology company. So I don't know if you've heard any news that would be good for the Tesla pop, but if you have any thoughts on the business, on Bitcoin having a pop today, because I know that's one of your favorite securities of all time, or Tesla actually finally having an up day after several down days.
Well, let's talk about Tesla first. With Tesla, I think that Tesla's a type of company that there's always something that could go on. So in other words, just looking at the stock price itself, you have it a little over 400 a couple of years ago, down to 100, touched 300. Now it's back down to 200. it's quite the wild ride, to say the least. And anything Elon Musk has his hands on, there's always something in the works, and the man's not dumb. And so I think that there's definitely going to be things that are in the works going forward for Tesla, and whether it becomes totally a tech company, just a car company, whatever the case may be. Let's just face it, 10 years from now, it's very likely we're not going to be driving anymore. We're just going to be sitting in our Teslas watching the steering wheel turn in a lot of ways. So anything like that, that's a world-changing stock. And what we did in the early days of this show is Apple was very much a world-changing stock like 10, 15 years ago, in that who the heck ever heard of this iPod? You can just listen to all your music on it. You can play games on it. Wow, that's really cool. And then all of a sudden the iPhone came out, and that really changed the world. And Apple did that and a bunch of other things with which they did too. Now, they're still a great company, of course, but they're not world-changing anymore because they haven't changed the world in a while. They've set the standard too doggone high. Tesla has the potential to be another Apple type of company. And you never know what's going to happen with Tesla. Now, in terms of Bitcoin, I guess as a short-term trade, it's fine if you're bullish or bearish, but as a long-term investment, I would like to refer to my website, bitcoinreallysucks.com. It is still for sale, by the way, so check it out in the domain area.
Yeah, I did see Bitcoin pop maybe on the global, that unpleasantness in Iraq. I guess some service members sadly were killed. Now, of course, the left and the right throwing arrows at each other. So Bitcoin maybe popped on the global unrest, and all the stocks related, like coin was up like 7-8% today at one point. You had a little bit of movement there. So, I mean, you've got again, on a quiet day, waiting for the Fed. We're now 4,900 SPX as our show happens. So I would say overall the volume in the bigger volume, top 10 volume is, I would say normal, if a little light, and that's not too surprising. Here's a list though of some earnings coming up and that's why this is kind of it's just a huge week. So Tuesday we have AMD, Pfizer, GM, UPS, JetBlue, Marathon Oil. So how the oils are doing as oil prices started to fade in 2023 somewhat. Microsoft, Google, Starbucks, Electronic Arts, and Match. Like Tuesday is going to set the tone, I believe, for the week. If you're seeing decent numbers out of those stocks, like I'm kind of leaning a little long via strangle, of course, but I am leaning a little long. So if those are good, I'm going to try my hardest to hold on to those long upside contracts as much as possible. Wednesday, Boeing, Philips, MasterCard, Qualcomm. Those are, I would say, more Main Street style. I believe Square has already, or Visa already announced, or Amex already announced, and they were up like 7-8% or something like that. So the credit card companies are showing, decent spending. Thursday we have Peloton, maybe getting back from the dead, maybe turning a profit finally. Who knows? It's been a while. And then you have Apple, Amazon, and Meta, which is Facebook. I can't call it Meta, but Facebook is reporting, and those are all, I would say big. Can Apple maintain its presence? As Mike said, they haven't really come up with a new product in a while. And then, and Mike, did you hear anything about Apple? Are they making an EV vehicle? That's what I thought I heard that noise. Like, so they're really going to enter the EV race in 2025. That was on Twitter, since I can't believe the news anymore about anything. I'm curious if you heard anything on Apple entering, finally throwing their hat in the car ring.
I have not, actually, but that would not, I know that there's been a lot of talk about that for years, but it wouldn't surprise me. And I think if there's any company that could throw their hat in the ring and have success with something like that, I do believe it's Apple.
Yeah, because it was interesting about just, constantly doing software upgrades. I read some article, but again, do not shoot the messenger on this one. It's a lot. I see news snippets all the time, and are they confirmed or not? And then finally, as of now, that is an unconfirmed rumor. But and lastly, Friday got Exxon, Chevron, the CBOE, which is one of my. I have not taken a longer term position CBOE, but I think they got something going on there with. I think their LEAP business is going to slowly start to absorb some of this over-the-counter trading because it's OCC cleared. I think that's kind of like a sneaky growth opportunity. CBOE had a very good year last year, so I'll be looking at their earnings report to see if they break out that kind of where their growth is. But if you look at that as a stock over the last year, you know, CBOE started the year at 122, ended the year at around 175. It's not a small gain. So CBOE growth still, you know, since they went public, it's been quite a performer of a stock. So those are kind of our big earnings for the week, and I think it very much will have an excellent look at the tone of this by, you know, Tuesday afternoon by 4 o'clock. We'll also see, you know, what big tech and how investors are relating to big tech earnings. So far, I mean, IBM, I'm not going to call IBM a big tech stock, although it did go like from 122 to 165 or something like that, or 115 to 165 in 2023. So that was quite a performance for IBM. But we'll see how if the market is still going to buy these multiples. And I'm curious to see what Mike thinks about that. But lastly, if you want these earnings reports, basically past implied moves, current straddle price, all that information, surf on over to ORATS. That is Matt Amberson, former pit homie of mine, his excellent option research trading company. So surf on over there. They got all kinds of good stuff on their website for you to peruse at your leisure. And I was looking to see here on if we had any real numbers yet. But for the most part, I would just say anecdotally, and what do you, Mike, I'm just curious on your thoughts. It looked like so far earnings have been okay. And I mean, and stocks are up for the month of January, as far as I can tell. So, I mean, they can't be that bad, right? They're still buying it.
Yeah, they are for sure. So, I mean, I think like I said earlier, what I'm really going to be looking at, or what I think is going to really be a driver of markets the remaining big tech names the next few weeks or whatever it is going to be the forward-looking statements of what they have.
Okay, and then when we start to hear that, we'll be able to talk about it more on Thursday. If I'm doing the show for Mark, we'll see which way the wind is blowing in that direction. So for right now, we could do well. I think that should wrap up our trading block. It's mostly a trading block of waiting for something to happen. What's going to happen over the next 2 days, and it could be quite big. And now let's roll into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the odd block. This is where we look at the down, the dirty, the strange, and the odd option volume. Although it is, I have to say, not as much fun without Mr. Longo, because he and I do enjoy these oddball option trades when they popped up. But he does have a couple of trades here that we can review. The first one is DLO lit puts, line in the sand puts. I don't know, is this on your radar? D Local Limited is the name of the company. Never heard of it before in my life. It is based in Montevideo. What is that? Is that Chile or Argentina? I think it's Chile, right? I'm just trying to think of where my South American geography is a little sketchy. Uruguay. There we go. Uruguay-based company, enabling global merchants to connect with emerging market users. So somebody on October the 9th wrote some October 17 puts for 22 cents. They sold 10,903 of them. And lo and behold, the stock closed 1802 on expiration. Looks like they were still open, and the trader looks like they pocketed $245,000 on this trade. The running joke here is always enough to pay for your girlfriend's Ferrari. However, it is amazing that all these line in the sand puts, the premiums do come out to somewhere between $200,000 and $300,000 when they actually write the put. So there's a reason why we have that joke, is because whoever does this seems to aim for the same type of trade every single time, and has the ability to take 1 million shares of stock at a pop if they get put. So that is a standard here, the line in the sand put, and the track record of the line in the sand put seller is quite good. They really know what puts that they want to sell. A next one here is we have CPRT, which is a Copart. This is another trade we're paying off from 9/11. CPRT. A customer bought 2,000 of the October 45 calls. They paid $1.38. And as of earnings, by the time expiration rolled around, the stock was trading $43.69. So their 2,000 calls that they paid $1.38 for most likely went out worthless. This is a tale of sadness and woe. I mean, it was very close to the strike, but not quite enough, and they dropped $276,000 on these calls. Now, what I would say from a paper point of view is, I saw last week looking at, of all things, CarMax. Not CarMax, Carvana. CVNA. I just got to pull this up. So there was a lot of active paper buying calls on Friday, buying out of the money calls. And today the stock is up $2. So I think they were bidding up to like the 45s, I believe. I'm looking at my snapshot here. But I don't know what they're buying in Carvana, to be quite honest. But they were bidding them up all the way up to the Feb Ordinary 42.5. So about 2,400 for $3.16. All trading on the Philly. And then today, when I look at it, Carvana's up $2. And let me see, those calls are now trading for $4. So we have winner chicken dinner on about a 50 delta call. It is now a 60 delta call. So that call buyer did very well. So I saw some, again, interesting paper in there. It was a little surprising. One thing that was interesting, because I'm in the market for a used car, and I've been watching used car prices drop like crazy recently. So I'm just looking at a Honda Passport to get around, and I'm seeing, like, over the last 4 months, maybe 4 or 5 months, prices have dropped like $4,000 or $5,000. So again, that's an anecdotal thing. So I don't know if that's good for the inventory these places are holding, or maybe lower car prices will bring used car buyers back. I don't know which will come first. you have anything to add on the used car market there, Mr. TOSAW?
I got a 17-year-old son and a 15-year-old daughter, and I thought we got a pretty good deal on my son's 2010 Toyota Camry. But when I see the insurance bill, it makes me cry. So that's my world right now for used cars. And I got another one coming up in a year.
So that is, oh, geez. I think I'm on my way to that. As I recall too, I have we had a car that was going to give to our kids to take to school, but it did not end well for that car. So that's why we're buying another one. But that's kind of where things are. I think, yes, insurance premiums, I think auto insurance premiums have gone up as well, like everything else recently. So now here is one more line in the sand put for SATs. This is the EchoStar combination with Dish, I believe. This is the combined company. And it does look like somebody is pulling the line in the sand. Now, this is a stub SATs 1. So usually when you have a corporate action, you'll have the new the new entity will maintain the name, and the previous options that existed will have the name plus some a suffix added to it, like this is SATs 1, and somebody sold the December 25 4 puts for about $1. Again, this particular name is like, I think there's a cash and stock in lieu, or there's definitely a corporate action there. That's why the 4 puts have some value. But somebody sold 26,000 of them for $1.25. Maybe they just thought that the deal was so impressive that they wanted to sell these things. So let's see here, SATs 1. I'm just trying to pull this up. SATs 1. But anyway, there is a huge trade on the print, or huge print on the tape for those particular puts. So when I look at that, maybe somebody is trying to do a little bargain shopping. EchoStar and Dish basically had two technology companies that had terrible 2023s, probably down, I'm going to say 50% or more during the year. Let's see where, because I know Dish traded like low, a multi-year low at the end of the year. Yeah, so SATs was down, I'm going to say about 15-20%. Dish was much worse. It was down like 50%. But now that this deal is finished, it'll be interesting to see if EchoStar and whatever they do with their spectrum, something comes out of it. But at least at this point, somebody, again, that's SATs 1, not the SATs ordinary, selling some big puts, or selling a big chunk of puts on the 4 strike, which is going to be a corporate action. So and when you get this information, it's not just they're selling the 4 puts in there, it's a corporate action on the 4 strike. All right. And with that, I think we are done with the odd block. Not a ton of paper out there today. I just thought a couple of interesting movers. But with the odd block, we close the odd block down. We know what is next time for, I believe, since it's Monday, it is time for TOSAW and his strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, welcome everybody to the strategy block. This is where I stop talking. I don't talk at all, actually. I just nod and I let the wisdom of Mr. TOSAW flow over me and his strategy of the day.
For sure. Always good to have a strategy for the day. What I want to go over today, as much as I'd like to spend the whole strategy block just saying mean things about Mark Longo. I can't. But on a serious note, I want to go over bond mechanics for today and how they work and why they're important and how they're going to be affected by how the Fed is going to affect bonds for better or for worse. And just what does all this mean? Because it's pretty easy to understand a stock. You buy a stock, you have a share of ownership in the company. If there's more buyers than sellers, you make money. If there's more sellers than buyers, you lose money. And if it's a good company, typically there's more buyers than sellers over time. And if it's a bad company, typically there's more sellers than buyers over time. And so it's fairly simple when you look at it that way. But in the bond world, what the heck does all this mean? Well, first off, there's three different areas with which a bond can exist. You can have typically. There's also, I shouldn't say, there's three general areas a bond can exist. You have a corporate bond, which is, let's say, Tesla sells bonds, Apple has bonds. You have municipal bonds that are bonds from municipalities, cities, or local municipalities in some way, shape, or form. So let's say that Hoboken, New Jersey wants to build a bridge, so they issue bonds. And then you have government bonds, not to be confused with municipal bonds. U.S. government bonds are bonds issued by the federal government. And all a bond is a loan. So if you need a loan and you're either a corporation, you're a municipality, or you're the federal government, you issue these bonds, and that's how you get a loan. Now, within that bond, the federal government, the municipality, or the corporation has to pay interest on that loan. And typically the way with which it'll work is you'll get a bond issued. Let's say it's a corporate bond with a term of 2 years and an interest rate of 5%. Now, in terms of if we want to get into all the terms like coupon, yield to maturity, yield to this, that, and the other, not going there today, trying to keep it at a general level for today. But let's say that the duration of the bond is 2 years and it's 5%. Typically, bonds are priced in $1,000 increments. So you pay $1,000, and at the end of 1 year, or quarterly, if it's divided up, or whatever the terms of the bonds are, the first year you're going to get $50, the second year you're going to get $50, and then at the end of the second year, you're going to get your $1,000 back. And that's how a bond works in a nutshell. Now, bonds can have shorter terms like 2 years. They can have longer terms like 30 years. They're sometimes called different things. In the federal government, you have bills, notes, bonds. Bills are anything below 2 years. Notes are anything between 2 and 10 years. And then between 10 and 30, it becomes bonds. And so from there, essentially, it could be a little bit more or less, but that's about how it works with how bonds are. And the way with which you'll have it set up is that, let's say I got my 2-year bond, and all of a sudden the Federal Reserve raises interest rates. Well, if that same corporation wants to issue bonds again, they're not going to be able to do it for $1,000 and pay $50 a year because the Fed raised interest rates. And because of that, there's a more competitive landscape for the bonds. So now, if you're 1 year into your 2-year bond, that same corporation is going to say, you know what, we still need to issue more bonds. So I'm going to issue another 2-year bond, and now we're going to pay 5.25%. And so if that's the case, who on earth would want to buy your bond that pays 5% when they can get the exact same thing for 5.25%? Nobody, that's who, unless you offer a little bit of a discount on your bond. Now, if you don't want to get rid of your bond, you want to wait until the end of the term in 2 years when the bond matures, that's fine. Everything will work the same way with which I said. If the interest rate never changes on that bond, then you can sell it for $1,000 at any time, just like I said. But if interest rates go higher, then the value of that 5% bond is going to go lower because no one's going to want to buy it for $1,000 and they can get the exact same thing paying 5.25%. So the value of your bond is going to go from $1,000 down to, and I'm just totally making up a number here, $970. Now, if you hold it till maturity, yeah, then you're still going to get your $1,000. But if you want to sell it midterm, then you're not going to get it because the value of your bond went down because the interest rates went higher. Now, on the flip side, let's say the Fed lowers interest rates. If the Fed lowers interest rates, then the value of your bond goes up because there's nothing that's going to be out there paying $50 for $1,000 anymore, because of the fact that now the corporation only has to offer bonds at 4.75. So if interest rates go lower, the bond values go higher. If interest rates go higher, bond values go lower. Now, it's a very oversimplified example of what I'm saying here, but it's something that's very important to have an understanding of, because what happened roughly a year ago with all of the regional banks is that they had a lot of longer term bonds. They leveraged them, meaning they borrowed money to buy these bonds. And then when interest rates went higher, the bond values were lower and they were forced to sell them at lower levels. And that caused a whole lot of problems until the government bailed them out, but that's another story. So when looking at bonds and how they work, they're very important, whether you're a stock trader, a bond trader, an option trader, or a futures trader, because they can affect other things. If we now have a massive interest rate cut, then money's cheaper. Corporations can borrow more money and they can build more widgets. And if interest rates are higher, then the opposite is true. So it's a complicated world at times, but the point I want to make for today is keep your eyes on bonds and have an understanding as to how they work, because they affect you in ways you may or may not think they do. And that is the strategy block. Last one for January.
That was very nicely done.
Why, thank you.
Nicely done, Mr. TOSAW.
Thank you, sir.
Well, if that is the end of the strategy block, that can only mean that brings us to the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Now here is the mail block. It will this time. We will talk about the this week's poll question. I will put this to TOSAW, and then we will pay off last week's poll question. So this week, again, since my audience is Mr. TOSAW, and we have no Mr. Longo. I haven't even really done a good job of besmirching him or causing him umbrage, except he's just laying in Florida looking at some wrestling extravaganza. Why does that surprise anybody? It surprises nobody. Anyway, so the question of the week is, so VIX has been below 15 since November. How will it impact your options trading if this volatility regime persists for an extended period? Now, will you do less credit or income trades? Will you do more debit or long premium trades? Do you have an other? Or you're saying, no impact, I am immune to VIX. So, Mr. TOSAW, this extended period of low volatility, are you doing less credit income trades, more debit trades? Do you have an other? Or are you Superman and the VIX does not impact you at all?
I don't know if I'd want to say I'm Superman, but I don't know if the VIX directly impacts me at all. It definitely indirectly affects me in some way, shape, or form. And I think throughout this time, there's always stocks with premium out there. And where it would affect me in the covered call world or in selling call spreads against the stock world, my other is that I will look for stocks with suitable premium if I cannot find some in the usual places.
Oh, okay. I like that. So you are volatility sensitive. So you have to go hither and yon to find something else.
I typically look for lower vol boring stocks, but if I have to get a little more exciting, we will.
Now, what do you think the audience is going to say?
I think they're going to say that. I think they're going to say that they're Superman. I really believe that.
There you're going with other. So that will be a rich vein for Longo to mine on the next episode. Going full Superman. To me, I think bull markets like long options. That's your best risk reward, best payout. So from a trading point of view, I think the more debit, long premium trades work better. So that's where I will hang my hat on that one. I think the public personally is going to do less credit income trades. That would be my guess. Okay, we're almost coming to the end of it here. And the question of the week, just to pay this off, what is your preferred way to trade the broad market vol? 42% said plain old SPX and SPY options, which I believe, Mr. TOSAW, you were in that camp, although I don't want to put words in your mouth. But
I am in that camp.
Yep. Now, here's one question from Taylor T. We got 20 seconds. What product do you wish you had more options volume or liquidity? Is there anything that you thought it would really help the market if there was better liquidity in it?
I would like to bring back the 10 share, the mini options, because I just have a lot of people to where I have an extra $4,000 here within the portfolio or this, that, and the other. I wish they'd come back, and I'd be willing to pay for them if there was liquidity in them. So I know I'm probably not in the majority on that, but I would like that.
Ah, nice. I would like to see more liquidity in the new genre of vol products, personally. So those are the two places that we would like to see stuff. Okay, now with that, the mail block is done. It is now time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, this is Around the Block. This is where we see what's on our radar for the rest of the week. Although Mike and I already covered this, we know what Longo's doing. He's just getting some sun and watching wrestling. He's just messing around. So for us people that actually have to work for a living, what are you looking at here, Mr. TOSAW, going into Thursday's show?
I mean, just watching the Fed. I think that's the big thing right now. Not all the tech earnings will be out by then, but watching the Fed, that's the big one. The Fed, and then seeing the 5,000 number, that's what I'm looking at.
I agree. I'm looking at the exact same thing. And I think people are going to suspend disbelief with tech numbers again and keep taking it up. So I don't see anything to change my mind all that. So, also, and lastly, if they like what you're saying, if they like your strategy block, where do they find Mr. TOSAW out in the wild?
A couple places. You can follow me on Twitter at Mike TOSAW. Or check out my website, stcharleswealth.com.
Wow. Okay. I should have sent somebody to you, by the way. Hopefully he contacted you. And with that, and for me, you can find Andrew at optionpit.com. All my products are there. They're trading. We're having a good start to the year. And hopefully we do as good as last year and the year before. That would be great. And with that, I guess for Mr. Longo in absentia, my guest co-host, Mr. TOSAW, and myself, Andrew from OptionPit.com, the Rock Lobster, we bid you all adieu. And as Longo would say, stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.